Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. And this is the show where we take you through all the stocks that are buzzing away in trade. But look at the markets first. A rather choppy day of trade coming in there, Vinny.
Choppy day.
In fact, Nifty, benchmark indices, it touched its record highs, cooled off, and then it's just been, declining. In fact, India VIX is up good 12%, showing a lot of volatility in the market.
Yeah, that's the reason also you get an indication, right? Looking at the India VIX as well in terms of the volatility, but look at the markets. The Nifty, at one point of time was below the 22,400 mark just for a very short period of time, but it went there. Now also 22,400 levels around that is what it's trading at, down almost a percent in trade. And in the Nifty, what's dragging the market today, one should watch out for is Reliance Industries. That's down and out, down more than 2% as of now is Reliance Industries. So a heavyweight Reliance Industries really dragging the market. Other than that, we have L&T, Bharti Airtel, HDFC Bank, as well as TCS, which is among the top losers today in a trade. While other than that, in terms of sector performance, also what you're looking at it, all the sectors today, most of them are trading in the red except for Nifty Pharma, which is managing to hold on with a slight bit of a positive right now, slight bit of a green that we're seeing only in Nifty Pharma. But other than that, all the sectors are trading in the red. So yes, a very, very choppy day of trade that one could say that came in for the markets. We saw extensive fall that suddenly in the second half of the day started shaping up. Couple of more hours of trade, so we'll keep an eye out on the market. But yes, as of now, 22,400 is what the Nifty is managing to hold on to. As of now, Ankita, that's the trend for the markets.
All right, so that's the lowdown of where the market is at. But we'll get started with all the stocks then. On our technicals, we are joined by Ashish Kyal, and from the research team, we are joined by Ansh and Gaurav. Gentlemen, welcome to Market Fatafat. Let's get started with all the stocks then, and let's begin with the first stock. And the first stock that I've picked out is Ajanta Pharma. Now, it is an earnings candidate. Good, strong set of results coming in then for Q4 FY24. A revenue, EBITDA, PAT beat the consensus by 2%, 9% and 8% respectively. Strong growth seen in India, the EM branded business and the US generics as well. Now, higher than IPM growth was mainly due to the volume growth followed by the new launches that came in for the company. And also the company is likely to buy back 10.3 lakh equity shares at a price of 2,770 rupees, which is a premium of 27% to the market price. Now, the record date for the buyback is 30th of May of this year. Let's look at the guidance that the management has also given. The management says that they expect the FY25 revenue growth to be in the lower teens. The branded generic segments is growing in the mid-teens teen level already. For India, the growth expectations would be high single digit to low double digit. They also expect the gross margin, the EBITDA margins to be in the similar range of around 75% to 27%, and they see an improvement of about 100 odd basis points in EBITDA based on the way the freight rates and the API prices will move. And on the back of a strong set of results coming in, we see a strong up move of good 6% in Ajanta Pharma, Vinny.
Absolutely, that's Ajanta Pharma. But let's move on to the next stock, and stock number 2, Ashish, Cummins. We did have some commentary that came in from Cummins PLC today. But what's your view in terms of Cummins India, in terms of the charts? Where do we see it headed? What are the technicals indicating?
Hi, afternoon to you and all the viewers. See, if you look at Cummins India, the overall trend is positive. The stock has given a very strong move on the upside. Despite the broader market moving sharply lower, the stock is touching that 52 weeks high, and that is showing bucking the trend. So overall, tone is bullish for Cummins India. Long positions can be created on any dip. We can expect a target of around 3550 on the upside over short term, and on the downside, the support for the stock is going to be around 3300 levels.
That's Cummins India for y'all. Let's move on to the next one, and we'll talk about Dabur. They reported the numbers yesterday. Overall, yes, an inline set of numbers, but what is exciting and what we're keeping an eye out on is one, the brokerage notes as well as the commentary that came in the con call yesterday. Now, in terms of the commentary that was highlighted also, one, they said that they are optimistic in terms of the gradual uptick in terms of consumption trends in FY25. They expect the EBITDA margins to be at 20% in FY25, aiming to achieve that mark, and mid to long term also they're expecting the margins to continue to improve. Rural showing a a sign of recovery. This is the first quarter in almost 3 years that rural grew ahead of urban. That was the commentary that came in. So yes, rural clearly seeing a pickup in the last 2-3 months is what the company highlighted. Other than that, we do have a brokerage note that came in from Jefferies as well. They're maintaining a buy, target price of 660 rupees per share. They said the numbers are broadly in line, reasonable valuations. Management is hopeful for that high single digit to a double digit revenue growth in FY25. So interesting to watch out for that. And they're saying that notwithstanding any of the concerns in terms of strategy and growth, valuation look quite supportive. So yes, they're maintaining their rating. That's the word from Jefferies.
All right, moving on. Gaurav, coming to you now. You've picked out Bajaj Finance for us. Big news coming in on Bajaj Finance. Also, brokerage notes staying bullish on the counter. We can see an uptick of almost 2% on the counter. Tell us what's the big news by RBI?
Yes, Bajaj Finance is definitely going to be in focus because now RBI has lifted its restriction. So what had happened exactly is that on November 15, RBI had put a restriction on 2 of its products, which is e-commerce and Insta EMI cards, and they had asked Bajaj Finance to stop sanctions and disbursals of loan under these products. Now, because of the compliance, RBI has now lifted this ban from Bajaj Finance. And in fact, if you look at the company's commentary on 25th April, when the Q4 results happened, company had said that they have actually made required changes in these 2 segments and have written RBI to lift the ban. And now we have also seen that the regulators have been positive on the company. If we look at brokerages also now, they are being bullish on this because if you look at the impact, brokerages were expecting impact to be on a cross-selling only. So, for example, if we talk about ICICI Securities, they believe that 20% of the total customers came from a digital platform. At the same time, if you look at Motilal Oswal, they believe that lifting this restriction would actually trigger the stock. And we have already seen that the stock price was up almost 4% in the day trade in the morning. Now it is still up 2%. So definitely there are some positive news coming up for Bajaj Finance because RBI has now lifted the ban from the products that they had.
Okay, that is Bajaj Finance for you all. Let's move on to the next one. And Ansh, Aztec Life Sciences, I believe that's also an earnings candidate.
Yes, that's right. And actually the stock was up around 4% in the morning, but currently due to market pressure, it has come down. It is trading almost flat, 0.2-0.3% in green. They have reported revenue, which is up from 127 crore to 153 crore, seeing a jump of around 21%. But they have suffered losses. But this loss, they have managed to control and reduce their losses from 5 crore in the previous year to less than a crore in this quarter. Also, we are seeing good improvement in EBITDA margin as well, from 4.2% to 8.3%, seeing an up of 400 basis point. Even EBITDA is up from 5.3 crore to 12.7 crore, seeing a jump of over 130% on year-on-year basis. Also on chart, if you'll see, the stock is up around 12% in last 1 month, but currently the stock is stuck in a consolidation phase from last 15 sessions.
All right, then coming to you, Ashish, then PFC, Power Finance Corporation, is what you picked out for us. Look at the returns it has given in the last 6 months. Good, solid 83% returns that it has given. And the stock is not stopping. Even today it's up, trading with gains of more than 2% right now. And given the power demand right now, what is the upside that you see here?
Look at Power Finance Corporation. I think the stock has given a very strong move, and over the past 3 days, we can clearly see a strong bullish candle formation. Right now, it is overbought, so I would use any kind of dip if we can get around the levels of 470 as a buying opportunity. We can aim for the target of around 520 levels on the upside for the stock, and on the downside, the support for the stock is going to be around 455 levels.
Okay, surely keeping an eye out on that. But let's move on and we'll take a quick detour because we do have a lot of IPOs that are coming out as well. Right now, we do have the IPO of TBO Tech IPO, which is opening on the 8th of May, price band at 875 to 920 rupees. And obviously, we'll be talking more about, what is it, because they're raising funds as of now of around, by a fresh issue is 400 crores. OFS is 1,150 crores is what they're raising. So the total issue size is 1,550 crores. Now to talk more about, the company, where will they be using these funds and all of that, we're joined by the management of the company. We have Ankush Nijwan, who is the co-founder and joint managing director, as well as Gaurav Bhatnagar's co-founder and joint managing director at TBO Tech, joining in with us. A very good afternoon, gentlemen, and thank you so much for joining in with us on ET Now. Gaurav, I want to start with you. If you could start by explaining that business model, what does the company do, and what it also seems like, it's quite interesting that quite unique with no peers in India. So, what is it that works out in terms of a synergy for the company?
So hi, yeah. So our business, we run a global travel distribution platform, and what that really means is that we simplify the business of outbound travel. Outbound travel means when we travel from our country to some other country for tourism or for business. That space is very large. 1.5 billion outbound trips happened in 2019, and similar numbers are going to happen this year. And if you think about it, that's a very large number. It's larger than India's population. That's the number of people who travel overseas. Now the challenge with that is that when people travel from their country to some other country, there is a lot of friction over there. There are several challenges with that, right? For example, I need advice on where to stay. Multiple components of a trip have to be booked, like flight, hotels, airport transfers, car rental, sightseeing, etc. People often need a visa to travel. Sometimes even developing countries like India, people don't even have a passport. Then they need access to Forex. So it's complex, and typically what happens is in such scenarios, people go to a travel agency for advice and booking. Now this is where TBO comes in. We aggregate global travel supply on the platform. So we have world's hotels, airlines, transfers, car rentals, sightseeing, etc. on the single platform. And then travel agents use our platform to make these complex itineraries for their customers. So in a nutshell, that is a business.
Okay, just I want to, before we continue, gentlemen, do wait on with us because the markets have seen a sharper fall right now. Nifty below the 22,400 mark, 22,380 levels is what it's trading at, 1.19% day's lowest point for the Nifty. And yes, just a short while ago, I was seeing the drags that are coming in. Reliance, that's down 3% now. And we do have Bharti Airtel, HDFC Bank, ITC, which are clearly among the moves that have seen a sharper fall today is from that. And now Pharma also in the red. So none of the sectors are trading in the green. So yes, that's the market sharper fall that we've seen coming in the market.
Right, more volatility ahead for the investors, Vinny. But we'll go back to the IPO that is about to hit the D Street. Coming to you, Gaurav, again, I wanted to drill down on the business model further. Is this commission based, and how do you as an intermediary make money?
So we have two business models. Certain suppliers, and typically hotels, they operate with us in what's called a net rate. So they give us one rate, and then we put a markup on that rate as a as our income. The other model is a commissionable model where certain suppliers, typically airlines, will give us commissions on every air ticket that we sell. We'll keep some of that commission for ourselves. Some of that commission we'll share with our travel agents.
Right, Ankush, can we just talk a bit now about the IPO, that 1,550 crores that the company is raising? Where will you be using these funds? Where are the proceeds going to be utilized?
So we are primarily, our raise is 400 crores, and I think the money which we'll be using will be, building and innovating more in our tech platform, because we strongly believe that's where we want to solve friction for the travel agents who are buying from us. A better user interface, better supply, both for hotels and air. And that's something we will keep building as we move on. And obviously for acquisitions, I think we're very, our theme is acquisitions. We have done 4 acquisitions in the past, and that's something which we would like to do also in future in India as well as overseas.
Right, Gaurav, the company has reported a solid revenue growth over the last few years, from 142 crore rupees in FY21 to 1,000 crores in FY23. What has led to this, and what do you understand that, some of this growth, how was this growth driven by COVID-led revenge travel, but going forward, is the outlook going to remain the same? Is the growth rate sustainable? What's your take on that?
So look, we are also comparing with the COVID year. So some of it was just coming back from COVID. But a lot of it is also the mix change. If you see, our business has, our business that comes from hotels has grown dramatically, right? Pre-pandemic, bulk of our revenues and GMV used to come from the airline business. Now it's kind of reversed, and almost half of our GTV is hotels, and 70% of our revenue is coming from hotels. That's a much higher margin business. So that has accelerated the growth of the business. From perspective of can it be sustained, look, I think we have to look at it from perspective of how large the market is. Like we talked about, 1.5 billion overseas trips happen. This grows by 6-7% every year. So just 100 million more trips get added to the outbound travel pie globally. So the headroom for growth is very large, and we should not be constrained for growth because of the market size.
Right, just Gaurav, we do know that, your major chunk of the IPO is from via OFS. So why is the promoter looking to sell stake in the company? Are they going to be infusing that money back into the company in some way or another form, maybe say a debt?
So the promoter group is offering about 5% equity, and important to note here that the promoter group owns a very significant share of the company, and will continue to hold a significant share of the company post listing as well. From a perspective of infusion of more money into the business, look, the business is profitable, cash generative, and negative working capital. We are raising some primary capital right now for the reasons that Ankush talked about, but beyond that, we don't see an immediate need for fund infusion.
Right, Ankush, so what are going to be the company's growth and expansion plans, say, over the next 3 to 5 years?
So I can talk in broad terms, talk about strategy actually. So the growth strategy is very straightforward. It's a platform business, so there are three things that matter. Keep adding more buyers on the platform, which means just more and more travel agents on the platform. So we'll be expanding our global footprint across all the 5 continents. Some of it may be inorganic as well. Similarly, on the supply side, on the platform, adding more supply on the platform. So depth of supply, so building more, adding more inventory for hotels, but also adding new product lines like car rentals, transfers, sightseeing, etc., and building meaningful supply around that. And third is just removing friction on the platform, making it more valuable for the travel agents. Using data and technology to make sure that it's easier and easier for travel agents to use the platform, find what they're looking for, and book it easily. So that in a nutshell is our growth strategy.
Thank you so much, Ankush, as well as Gaurav, for joining in with us this afternoon, giving us an understanding in terms of the company just before the IPO opening on the 8th of May. 1,550 crore IPO, that is TBO Tech, opening next week. But let's keep it going with the stocks that have been buzzing in trade on the back of news flows and technicals. And Ashish, Grasim on the technicals, what's the word coming in for this one? Because they aggressively have a lot of expansion plans. We have seen those Aditya Birla Group stocks buzzing in trade. And is that the trend that you're picking up on as well?
Yes, absolutely. If you look at Grasim, the stock has shown a very strong rise in this session. And over the past few weeks and months also, we can clearly see the stock has been rising steadily. It has been forming higher lows that indicates that the overall trend has been positive for Grasim. So long positions can be created on any dips that you can get, aiming for the target of around 2,600 on the upside. And on the downside, the support for the stock is going to be around 2,450 levels.
Okay, keep an eye out on those levels over there for Grasim Industries. Let's move on and talk about Link. This is into the stationery side as well, Link Pens, and they reported their numbers. This is a recently listed company. Quarter-on-quarter basis is what the comparison we've gotten in terms of the balance sheet. Now, revenue, when you're looking at it, it's up almost 14%. The EBITDA margins up around 19-20%. EBITDA is up 19-20%, but there's some bit, in terms of margin, just a marginal increase there. Not much of an excitement there. The profit of the company have managed to see a very, very strong jump of around 55%. So it'll be interesting to watch out for, because a lot of these players have actually listed in the recent time in the stationery side, in the glassware side, and that's something we are keeping an eye out on. As of now, the stock is clearly under pressure, and we'll watch out for what actually happens going forward. Today the markets have been quite subdued, and that is the reason also maybe we could be seeing that despite a recent number, Link Limited is actually a stock that is under pressure.
All right, coming to you, Gaurav, Kotak Mahindra Bank is what you have picked out for us, an earnings candidate. It is likely to report its earnings soon. Tell us, what are we penciling in? In fact, just yesterday, the stock had hit its 52-week low, and it is trading with cuts of almost 2% in trade. Tell us, what are we penciling in for this one?
Well, yes, as you rightly said, that Kotak Mahindra Bank is in focus, because if you look at it, the stock is now trading at 52 weeks low. But apart from that, the company is also going to come with 4Q results tomorrow. And if you look at the numbers now, Street is expecting a healthy set of numbers coming up from the company. So net interest income is expected to increase almost by 9.5%. PPOP, we may see a growth of 6% on a YY basis. And for PAT, now Street is expecting a decline of 2.6%. Whereas if you look at if you look at the sequential basis, this can increase almost by 13.5%. What they're actually expecting is that NIMs to remain at 5.15% level versus what we have seen at 5.2% on a sequential basis. Apart from that, if you look at assets and liabilities, now they're expecting advances to grow by 17% and deposits can also grow almost in the same level. And apart from that, they're also expecting some kind of provisions to decline on a quarter-on-quarter basis. But the main factor during this result will not be numbers, but it will be more like the recent actions that I've seen in the bank. So for example, RBI has banned bank from onboarding new customers. They have also banned bank from issuing new credit cards. And at the same time, we also saw that joint MD of Kotak Mahindra Bank, Mr. KVS Manian, recently resigned. So these are the factors which are going to be in focus. Definitely numbers are expected to remain healthy, but definitely watch out on how commentary is coming up from Kotak Mahindra Bank.
Surely we'll be watching out for that. One more working Saturday for Gaurav. Kotak Mahindra Bank will be reporting its numbers tomorrow. But let's move on. And Aptech, Ansh, that's also the stock that is in focus. The stock is down after its numbers. What were they looking like?
Right, so the stock is down by around 6-7% in trade today. So they have reported revenue of 104 crore, which is down by 178 crore, seeing a down move of around over 40%. But the main net profit, it is down by over 90% from 33 crore to around 2.7 crore. Even EBITDA, it has seen a down move from 35 crore to 3.9%, which is down by almost 90%. EBITDA margin is also it has also come down from 20% to directly 3.7%. Also on chart, if you'll see, the stock has actually given a breakdown from its 6-session consolidation pattern, and it has slipped below its key 100 EMA level as well, which is also a negative sign for the stock.
All right, the other counter that is in focus today, and that's Coal India. Well, despite, Vinny, the below market expectation numbers, the stock is still, on an up move, and that's primarily on the fact that, brokerages are maintaining a buy rating on this particular stock.
Okay, and as of now, it's holding on to 2.3%.
Precisely, but the results weren't that great up to the market expectations. But despite that, the stock is really maintaining that those levels. Now, a couple of brokerage notes that are maintaining a buy on that stock, as they believe that coal remains the dominant fuel in the foreseeable future, even as the world is trying to switch to renewable energy. However, the target prices were cut on concerns around the declining premiums in Q4 FY24. Coal India's net profit rose 26% on a year-on-year basis to 8,640 crore rupees due to cost efficiency and benefits from changes in the accounting for stripping activities for one cast mining. The state-run miners also revenue from operations rose 2% to 37,400 crore rupees. And the brokerages that have come out for Coal India, MK has maintained a buy with a target price of 550 rupees. Nuvama is also maintaining a buy with a target price of 537 rupees per share. Jeffries also giving a buy call and target price of 520 rupees, and Macquarie is maintaining an outperform with a target price of 465 rupees. And a quick word from the chairman and the MD, PM Prasad, said that the Coal India expects demand for coal to remain robust across all sectors, as India's peak electricity demand is likely to touch 256 gigawatts in 2024. Vinny, on the back of that, we can see the stock buzzing away in trade.
Absolutely, surely. But let's move on and take the word on the technicals as well. Ashish, what's your take on Coal India? What is the target that you're keeping?
On Coal India, we can clearly see a very strong break that has come in. The stock has managed to, break that 460 mark and is moved higher sharply from there. And we can clearly see it has bounced back from that 2 days average also. And the overall trend remains bullish for the stock. We can expect it to reach towards the level of 490 on the upside, which is near the previous high. And on the downside, one can maintain a stop loss of 450 levels.
Okay, keep an eye out on those levels over there for the Coal India stock, as well as we did have their numbers that were reported. Let's move on, talk about Coforge. That's the one we're keeping an eye out on. And yes, they reported their numbers. Overall, when you're looking at the Q4 numbers, they were in line with what came in. Revenues were in line, 1.9% growth in terms of the dollar revenue terms, 1.9 CC growth is what we're talking about on a quarter-on-quarter basis. EBITDA margins 14.4%, as well as in terms of which was slightly below what one was expecting, but management has refrained from giving any quantitative guidance. Now, other announcement that came in for Coforge was that Cigniti, they made an acquisition there. They are acquiring 54% stake in Cigniti Tech. Tech for a maximum consideration of $250 million, and Cigniti is engaged in the quality engineering and software testing as well, and they will use the proceeds from the QIP for this acquisition. The acquisition is a 3 new scaled up industry verticals which will work out as a synergy for the company, and obviously they said that Cigniti acquisition is going to be EPS accretive for them, and overall they expect to complete the acquisition by Q2 FY25. Now in terms of the brokerage note that we're seeing coming in, InCred actually today downgraded the stock to a reduce from a previous hold and cut the target price to 4,431 rupees from a previous target price of 5,871 rupees. For them, it was a miss on all the fronts in Q4 numbers, and Cigniti acquisition drives 6 points cut in their EPS target. So yes, keeping an eye out on that one.
Absolutely. In fact, Coforge is one of the top losers in trade today. But a slight segue, because we are moving to an ET Now exclusive now. Sources tell ET Now that Apple is looking to expand its retail presence in India and is planning to open another store in Mumbai and 2 stores in Delhi NCR region. And for that, my colleague Sumita Karir is joining in with more details.
After marking its successful offline entry last year in New Delhi and Mumbai, Apple, the tech giant, has plans of expanding its retail presence further in the country. What we are learning from our exclusive sources is that Apple is looking at least 1 additional store in Mumbai and 2 stores in the Delhi NCR region, 1 in Noida. The other one could be in Gurgaon region. In fact, what we are also learning is that Apple is scouting for iconic locations like Kala Ghoda as far as the Mumbai region is concerned. Now, that's part 1 of the expansion strategy. Part 2 of the expansion strategy is that it is looking at upgrading its stores. APR, that is Apple Premium Resellers, and APP, that is Apple's Premium Partners. These are the other 2 formats besides Apple's own stores. So Apple is looking at upgrading its APR stores into APP stores and APP stores into Apple's own stores. Of course, this will take a bit of time, but that's essentially what the plan is. Apple has also told its APR and APP store owners that they can very well expect their revenues to double. In fact, one of the APR store owners told us that the revenue that he made last year from 1,000 square feet Apple store in New Delhi was around 3 crores, so they can expect that to double very well as far as this year is concerned. In fact, this just as in the earnings call for the March quarter, Tim Cook said that India is an important market. He said, and I quote, "We did grow strong double digits in India. Also, we're very pleased about it, and it was a new March quarter revenue record for us. And as you know, I've said it before, I see it as an incredibly exciting market, and it's a major focus for us." Now, what's important to note is that Apple's overall sales have dipped by 4%. Its iPhone sales have dipped by 10%, but the India market continues to do well after its entry into the market last year.
All right, more Apple stores in Mumbai, Vinny.
Absolutely. I am
Both of us are Apple users, so good for us.
That is good for us. But on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.